Hey everybody, this is Jose Blasco. We are about to get started. Quick sound check as always. I can see already some hellos in the chat box. How are you, Mark? That's the way to do the sound check, everybody. So please have a kind message on the chat box so I know that you hear me. And therefore we're ready to get started. It's time to go actually. So I'm just gonna grab a sip of water if that's okay and we go. I will also turn on the camera. I forgot to put myself in the bottom right corner of the screen. How are you, everybody? Good to see you all. Welcome to the session, May-5, 2021. I got a Star Wars shirt today. Actually, we should have done the session yesterday, isn't it? May-4. Anyway, bad joke to start the day with. Welcome to the session, everybody. My name is Jose Blasco. Options with Options is the title for the session. We're going to be exploring the markets. Today, the beauty of options is that we can be really adaptable to market conditions. We need a little bit of patience to build those trades, but then probability, it's pretty powerful and we love it. And that's what we do when we get together on the Wednesdays and the Thursdays and we do our options trades. How are you, Christian, Paul? Good to see you all. So highlighting very quickly here the disclaimer on the screen. So before we start, you can have a look. You can read it carefully. This is important information. Please do not skip any word. This is indeed important stuff beyond the legality. Really, the message is very clear. It's practical and it's accurate, representing the reality. Financial markets have money involved. Therefore, there is risk, and it's real risk. It is not a joke. So make sure that you are prepared to trade before you trade, and if not, you can always use paper money, etc., do back testing. Just make sure you build up your skill and certain degree, a certain level of confidence before you start. Okay, very good. Oh my God, Mark, this is an amazing message that you are just sharing with there. I was not aware it was May-5. This is incredible how times fly. Oh my God. It feels like it was yesterday, actually, 8 years ago. Oh my God. Anyway, well, you just put a smile on my face, Mark. Very, very kind of you to, bring that memory back to me. Anyway, agenda. Hello, everyone. We just said that we are simulcasting. This is probably not the first time you hear me say that. We are streaming in parallel in multiple places at the same time, which means that there may be video lags of a different duration depending on where you are, and the platform you use could be Facebook, YouTube, our private room inside our website, tradewithufos.com/live, etc. Okay, so let's begin with the session. We're going to be looking at the market, then we'll review the trades we have. We'll then look at more trading opportunities, okay? There will be a moment in the session where we'll discontinue the stream in the public streams, places such as Facebook, YouTube, and so on. And then we will continue a full duration stream on the private room. Again, this is our way to adapt to, the pretty clearly defined two groups among us. Some of us are, super passionate. We never got enough. We always want more. Some of the members of the community are a bit of the opposite, meaning that they certainly look at trading seriously, but it's more like a part-time thing, and therefore time is limited. So for the ones of you with less time and less, I was going to use the word interest. Is not accurate really if I say interest, but if you are, okay with putting less time into this beautiful activity, so then use the public streams. So it's free attendance. The content is the same. It's just less quantity of it. If you are like me, if you are more into killing it, loving it, the more the better. So then I recommend you to look at the coaching plans in our page, so you can have access in the private room within our website. Anyway, so closing now the PowerPoint intro slide so we can jump into the markets and begin our analysis, understanding, review, and trading. Very good. Okay, so let's begin with understanding the S&P. Okay, so what do we have with the S&P? Well, today we have a change of climate. We went from 7 blue dots, okay? 7 blue dots, statistics suggest 6. So we actually surpassed that by a little bit. And from there, we went into a down climate, which is not even confirmed, same as what happened before, right before there was another push to the upside. Notice that statistics suggest that this down climate should be quite short in duration, 2 candles, and therefore, with those UFOs here and here, so we would expect either the market to come to here before going back up, or for the market to come, maybe a bit lower than that, maybe bounce a bit here, come to the next UFOs, and from there continue or restart again another up climate. That would be the expectation based on probabilities. So with that said, also we have a red UFO, which obviously, while we are in a down climate, even if it's not confirmed, that may cause a little bit of a threat when it comes to the market continue going higher. But if the market was to do what I said, which is, based on the climate, it goes down, let's say for 1 or 2 more days and then goes back up. So when the price gets to that red UFO, probably at that time, you would see again a climate of blue colored. And if that was to be the case, how are you, Wayne? It's beautiful to have you with us today. Very nice to see you, Wayne. I'm sure the team is with you as well. So super hug, super hi to everybody there. So if the market was to come back to that red UFO, as I was saying, so next thing you know, what would probably happen is that because it's an up climate, and in an up climate, sell on-field orders tend to be cancelled. So then we may be in a situation where, again, we start making all-time high, all-time high, all-time high. We were trying to expose ourselves with USB and Ally. Okay, we tried to expose ourselves to that possibility the other day, but it didn't happen because the market changed from blue to red. So we were not able to get the trade. We were not able to exploit that all-time high opportunity. But again, it's all about patience. Trading is many things. One of them is patience, right? So patience, discipline, many more things, but definitely patience is one of them. So, we'll wait for the right opportunity, and if that happens, we'll be on board, looking to exploit another strong push to the upside if that was to happen. And if we're wrong, and let's say we get into the trade and we're wrong, of course, risk will be contained, because everything we're going to do will be limited risk. And then I'm counting on your discipline as well to execute the trades in a way where it's safe, not to over position yourself, etc., etc. So everybody, it's in a position where you're going to be in the market for a long time, instead of either making a lot of money in a short period of time or lose a lot of money in a short period of time and get either greedy or scared, and both of those are not very good ideas. Okay, Leland, how are you? Very nice to see you as well. Very nice, guys. So anyway, so this is what's happening with the S&P. Okay, now when looking at the VIX, well, obviously, when we look at the VIX, and I'm just going to zoom out a bit, okay, so we have a better perspective. So what happened to the VIX? Well, a few days ago, we kind of hit 22. Last week when we were in the room, we were looking at the reaction of the VIX from that green UFO, which was about, 17 more or less. And we were talking about that level being, quite low, and, we were expecting or definitely would have been a happy moment if some volatility kicked in. Well, guess what? It did happen. Okay, it reached to levels, around 22. If you guys were practicing trades, either last Friday, last Monday, so you may have had opportunities to capture, pretty decent levels of premium. Today, it went down to 18.56. Okay, again, it's less than 22, but definitely is more than 17, which is what we got last week. So again, we'll be exploiting what is possible today. But with red UFOs above and green UFOs below, to be honest, both trades for credits as well as trades for debits will make a lot of sense, because premiums are likely to increase, as well as if they increase, they're likely to decrease then. So in this case, definitely no bias, and therefore my preferences when building position would definitely depend on what is it that I have in the account already. Meaning, if in that account I already have too many trades that are credits, then I would want to add debits. If I have too many debits, I would want to add credits. Another way to say that, if I have too much positive Vega, I want negative Vega, and vice versa. But also, directionally speaking, if you had too much positive delta or too much negative delta, you would want to offset that, with positive gamma positions. So you have a little bit of a hedge in your portfolio in case something important or a big move happens and it's against you. You have other trades offset that problem. Okay. So again, as you will see right now, as we speak, we only have one trade, even though I got 3 to be reviewed. Okay, so let's start with the bottom. I'll start with Ally. It's to be reviewed, but we are not in this trade. Okay, so that's easy to explain. How are you, Jeff? It's good to see you. Very nice to see you, Jeff. So why is it that it's gonna be easy to explain? Well, because when we planned the trade the other day, price was more or less here, if I'm not mistaken. We said we needed price to go back down to 50.07. So if it had continued a bit longer and hit the line, we would be in a trade, and now we would be in a nice profit. But it didn't go as low as needed for us to be in the trade, and therefore, even though I did place the order in the system, I did not get filled. Why? Because price never came to my triggering condition for the order to be executed. So the trade was not executed. Notice how the only trade we have in the account at the moment is COP. Okay, that's why I said I'm going to review Ally as well as USB quite quickly, because they are basically copy-paste. Okay, so if you look at USB, same story. We planned the trade on that day. We were expecting that stock to come down, hit the dotted line, and then get into the trade expecting the move. Well, the move happened, but we never hit our entry. Therefore, the trade was missed. We did not get filled, and therefore I have nothing else to review in here. I'm just gonna delete those 2 symbols and now focus on COP, which was a much more interesting trade that we put in place. Okay, cool. Okay, so let's take a look at COP. Okay, and I understand that multiple of you are in this trade. So feel free, even if you're not in the trade, of course, feel free to ask questions, but definitely if you are in the trade, basically the trade is risk-free, right, since the last week. So, whatever happens, thank you, Mr. Market. But at the same time, if there is any question, it would be interesting. It would be interesting that you guys phrase it so we can look at it. Okay. Yes, Mark. The entry was not met. Even the next days where the EMA kept rising, still it didn't hit those levels. And those 2 trades basically were a failed attempt, which happens often, especially when directional. That's actually the beauty of non-directional trades, right? When you do iron condors, when you do double calendars, things like that. So what's the beauty? Well, the beauty is that price is somewhere in the middle of the range and you take the trade, and it doesn't matter much on where is it in the range. It's just we like it to be close to the midpoint, but it doesn't need to be that precise either. So plan the trade, execute the trade, no time to wait. With directional trades, you have to wait for the market to come to the right entry point for the trade to be executed, and this implies patience, but also it implies many trades to be planned to then not to be executed because the rules are not met or price never came to your entry. Okay, so it's part of trading. It's a normal thing. How are you, Ahmed? It's good to see you. And the COP put was filled today for 5 cents. You are correct, Mark. You can also see it here on my TOS. TOS, of course, when you use a demo account, will be just a bit more optimistic. And here it shows I got filled at 0.4. Okay. But you got filled at 0.5, which is probably more what would happen in the real world. Okay, so normally we talked about this before. Okay, the demo accounts versus real accounts, you will have a little bit of a difference in pricing. Okay, anyway, so let's load OptionStation Pro so we get to understand this trade. This trade was interesting to plan, isn't it? I remember we talked about many things here when we planned the trade, and it was actually a little bit of a challenge the day we put it together, because it was the first time we did a double calendar. So it was a little bit of a challenge to understand the whys and the what ifs of the trade. But then, I believe that we kind of overcome that through reviewing the trade every week, and just keep evolving it to what we have now, which is a trade where worst case, we're going to make $43 per contract. Okay. Base case, we're going to make about $140 per contract. Okay. The current price of the stock is 55 something. So, okay. So 55.39. We are currently making 67.5, which is right here. Okay. That's right there. Okay. We are making 67.5, which is more or less here, isn't it? So that's where we are. Again, ideally, we would want that stock, which is currently trading at 55.39, to go above 57. So then we're gonna collect our, 140. So what are the different possibilities that we can do here? Well, some of you may say, you know what? If I do nothing, I'm just gonna make 43, and that's quite likely to happen. So why don't I close it now and make 67? So that could be a valid thought, but the problem is that now we are getting, it's still Wednesday, but next thing you know, it's gonna be Friday expiration, and what happens is that, especially the options that are a bit further out, okay, like for example the 49 put, well, that one has been closed for 5 cents, so that one is fine. But for example, the 50 put that you're long, so if you wanted to sell it, probably you're gonna get some slippage there, because not only they are far out, on top of that, the problem is that, or also the far in too will have the same problem, but the problem is that those options are getting a bit too close to the expiration date. And when that's the case, lots of liquidity evaporates because it starts moving into the next expiration date, or the next monthly, next weekly, depending on the stock. So you may see a P&L of 67.5 and you try to close the trade, and maybe the only way to close it really is to give up a lot of the spread, and then next thing you know, you end up with $47 instead of 43, and and on top of that you had to pay commission. So maybe one better way to do it is just to do nothing. Okay, just do nothing at all, and let it be, and then you'll be out either for 43 or 140 plus, and that's it. Okay, so that's probably a better way to approach it, especially when we are getting too close to that expiration. Okay, where we may lack liquidity in some strikes. So so not much more to say really. The only thing that I could adjust here is the fact that when you look at that strangle. So in the demo account, the 49 put, was filled, as you saw, at 4 cents in my case. Okay, so in other words, instead of making $43 maximum, instead of $43 maximum, I would give up $4. Okay, so another way to say that is that let's put it here on the debit, for example. So instead of my net debit was 20 cents, it's like your net debit has been 24, okay? But now you don't have the put any longer. Let me make this to be custom. You don't have the put any longer, okay? And therefore the risk profile now looks like that, meaning that in the middle, you're gonna make 39. If it goes up, you're gonna make your 140. But if it goes down like a massive collapse and goes below 50, so now you can make lots more money because it's unlimited. Now, of course, given the fact that we only have, 2 days and a half to expiration, it's pretty unlikely to get to 50. It's also not so likely to get to above 57, even though, it's within the gray area, which is 1 standard deviation. So we may get there. Okay, we may get there. Could be. But again, it's a good technique to employ. To close that unit for 4 or 5 cents, the order we placed was 5 cents. I got filled at 4, and if something dramatic was to happen in the market, this may happen, very few times a year. But when it happens, it will spice up, big time the P&L of your account that month. So why not to bring this possibility to the account, given the fact that the risk of doing that is basically giving up on $4 in my case, or $5 in Mark's case. So it's certainly a wise choice wise choice to make, and therefore the right action to be implemented. So that's why we placed that order last week. Okay, so basically we are now in this particular risk profile. Again, this is a very enjoyable trade because you don't have to do much, and worst case you make money, and that's guaranteed because of how options work, and the strikes and everything else. And now the only thing we are crossing fingers about is, okay, Mr. Market, Mr. ConocoPhillips, just move, do it like greatly, whatever direction you pick, but just move. Okay, and then instead of $39, then it's gonna be a bigger smile on our face. Okay, so let it be. We'll come back tomorrow and review this. And to be honest, there will be very little for me to add. Maybe the market went down, and also we closed the call for 5 cents. So we'll see. The call is currently trading at what? So the call is currently trading at 31 cents. Okay. So we'll wait and see if that call tomorrow, which is the 57 call, is trading at less than that, okay? Maybe yes, maybe not, so we will see. So we'll just leave it like that, okay? And this is all about this trade. If there is any question related to this trade, this is the time, because now I am about to begin planning on new trades. So please go ahead and comment on the chat box if there is anything else to add or to ask. Very good. So anyway, so time to begin looking for new trades. I'm gonna sort my list of stock from pricier to cheaper. Notice I am looking at non-directional trades. The way I customize the scanner is looking at top. Okay, why? Again, I told you that, you know, I could do anything really. I only have one trade on the account, so it's not that much. And also given the VIX, we said that, you know, no need to have a preference really. So it's fine, but at the same time, you know, just like to be, you know, acting the way you would want to act if instead of a demo account it was a real account. So we have COP, which is positive vega, right? So then my next intention is to build negative vega positions. So then I'm gonna go for credits. So I build negative vega positions, okay? Assuming I'm gonna find the setup. So I got a collection of new symbols here, and we're gonna start one at a time. As always, I sorted them from more expensive to less expensive. And we're gonna start with this one, which, you know, careful here because it's showing earning date to be May 6, okay? So May 6, obviously, if we look at the calendar, would not work. May 6 is actually tomorrow. So we cannot even use next Friday, which is the 7th. So, you know, ideally, actually, we could use the 14th, okay? So May 7 or May 14 would be the ideal you know, expiration date to be selected, and therefore we would like earnings to be beyond May 14, okay? Biogen, I'll skip it. We'll look at Disney. Okay, so looking at Disney, earnings are on the 13. Well, the 13 is less than the 14, okay? So in this sense, it does not work. We do have two UFOs above. We only have one UFO below, okay? We may have more UFOs in the pre and post market. Let's see. Yeah, but notice 1 and 2, okay? 1 and 2, but they are so far out, okay? And again, I cannot use May 14 because earnings are on May 13, so I would only be able to use May 7. And again, let's not waste the time because if we look at May 7, probably there will not be enough premium to justify the trade, okay? So here's Expedia, no data available. That probably means that earnings have been reported not too long ago. Okay. Yeah, last time was here. Yeah, well, the fact that it says no data available, and given the amount of candles on the screen, I'm pretty positive that maybe it was even today. I mean, I could go ahead and check. I'll skip it. It's okay. In any case, when looking at Expedia, so notice that, you know, we're basically making all-time high. And when I look at the 55-minute time frame, it doesn't seem that it doesn't seem that we have more than two UFOs. We only have one UFO above, and our rules state that we need two UFOs above and two UFOs below as a minimum to do a non-directional trade. So then I'm going to move to Walmart and get to understand what do we have there. Walmart providing 58%. Earnings, I would say, probably just happen as well because it's showing as this. Yeah, let's take a look at Walmart. Maybe there we could have something. Maybe, not sure yet. So far I'm just loading it. Okay. I noticed there is an issue with the option chain on TradeStation where it doesn't take you hitting intro in your keyboard. You have to click on the symbol since a few days ago. I'm not sure why. But anyway, so when looking at pre and post market, what do we have with Walmart? We have 52%. Okay, so good probability. More than 48, which is the minimum. That's okay. But again, before we look into that, I want to see if there's been a significant drop of volatility or not. So yesterday volatility was 0.22. If we look at the option chain for Walmart now, the volatilities are 25, 14 if we use May 14. So in other words, the volatility has dropped a lot here, and that is probably because earnings already took place. I could certainly go ahead and bring, TradingView, for example, to reconfirm that. Okay, so you can go ahead and here I have a handy workspace, which is where is it? I think I lost it. Yeah, probably I changed it. Okay, so anyway, I'll do it here. So WMT. So I'm loading Walmart. I'll make it a daily time frame, and yeah. So basically, I'm just gonna. Oh, it's interesting. There is no information about earnings. There is no information about earnings at all. So yeah, I need to know more about this. I'm just getting skeptical about this trade because I don't have information enough. So I'm just gonna pass and go for the next one, guys. Yeah, that's what you do when you don't have the information you need. Mark, you say Walmart earnings tomorrow. It's interesting because here it says no data available. It's very, very strange. Okay, maybe they have changed the earnings date in recent times, and again, this creates lots of uncertainty. Again, when this happens, it's better to stay away, guys, because next thing you know, now you may get in trouble and you don't even know you got in trouble. Okay, so if you have the information you need accessible quickly, then great. If you don't, let's go for the next stock. Okay, so Win. Well, Win has earnings happening very soon as well, or already happened actually. Yeah, they already happened. So BBY. The last 2 weeks, by the way, they were very, very intense on earnings reports. Okay, very intense on earnings report. Another stock with no data available. So this is actually quite weird. It's too many stocks with that same problem. Let me take a look at, again, I'm gonna look at this here. Okay, here we do have the date, which is May 27. So with BBY we are fine. Not sure if that's the case why TradeStation doesn't show the date. Whatever it is, this is a source to be trusted. Oh, Mark, you were looking at TOS. Well, TOS is definitely a source to be trusted as well. I mean, normally I've seen very good information there, so I guess it's fine. Okay, so BBY. So what do we have? Well, we have UFOs above and below. Problem is that the UFOs above are very close, the UFOs below are way further away, and therefore to do another directional trade, we won't be able to be kind of centered unless we find more UFOs. And unfortunately, I'm looking at finding more UFOs with pre and post market data, but they don't report enough performance. Okay, so we're gonna have to skip it and go for the next one, which is TSN. Let's see. Okay, again, another case of no date. Very weird. So regular session, we got almost 53%, so all of this is good. Only one UFO though. Let me look at the monthly time frame. Okay, plenty of data above price. Okay, so I guess we should be able to find UFOs. Okay, actually we got lines there from prior analysis that we have done before, so maybe there is an opportunity there, but I need to make sure I got my dates. So looking at TSN, the date is May 10. Okay, so with May 10 I can only use May 7, which is a $77 stock, and again with very high implied volatility values or very high VIX, maybe I find the premium I need, but if not, it's probably gonna be wasted time if I get into the chart to do this analysis. Okay, so we're gonna go back to the next symbol, which is BHP. It's not giving us enough probability. What about pre and post market? Instead of 43 we get what? We get 33, so no good. And BUD, so what do we get with BUD? Okay, pending data, so we're just gonna wait. Again, no data available for earnings, so I'm just kind of concluding that it's either a coincidence or there is a technical issue with that that indicator. So I'll have to find out more about that. Pre and post market 36. If I look at, regular session is 43, which is less than 48, so we're not gonna do it. WDC, Western Digital, it's providing 45%. If we look at pre and post market, it's providing 37, which is not good enough. If we look at K, okay, 40% when looking at pre and post market data. I mean, it's still loading. I'm gonna wait. And while it's loading, I'd like to add a comment here, something that I've said before. Okay, I'm going to switch to regular session, which is that we are in a time where there is not that much premium, but there is plenty of historical volatility. Therefore, what happens? You know, the distance between UFO is normally quite wide, so you have to sell options quite far away. But then the problem is that premium does not justify. You know, months ago. Last year, even though volatility, I'm talking about the real volatility, the historical one, the one you see on the chart, was high, but premium levels were even higher. So almost every time we would load a chart, okay, you'd have a trade there ready to be taken. You know, these times when you have a situation where either premiums are very low or premiums are high, but volatility historically is also high, so then it takes time for you to build your trades because you got many trades to be discarded, many no's to be given before you finally give a yes, okay? So patience, guys, don't break the rules, because if you take any trade just because, odds are against you, and then you are exposed to, you know, how lucky you are. Maybe you're a lucky guy, great. This is gonna be another bad joke, okay? But it doesn't matter, you know, how lucky you are. In the end, you know, there is a moment in time where people tend to run out of luck. So my approach here is that you don't rely on luck, you rely on stats, right? And the discipline and following a very specific set of rules will force you and put you in that situation where, you know, stats, you know, it's what is gonna help you, okay? So anyway, so K, we're gonna pass, okay? 59% probability is beautiful, but only one UFO below, and the next UFO we don't even see on the screen, meaning that we're gonna have to sell options too far away. It's a $62 stock, so we will not get premium enough with the current levels of VIX, okay? So we're just gonna pass. Loading DKNG, plenty of UFOs and look like very good probabilities. So far that's beautiful. 56%, that's nice. So this is the type of setup that you want to see. Now, of course, the key question is, what's the earning date? So they DKNG. So let's find out what's the, look at that. The earnings date is happening on May 7. So actually we cannot do this trade because even with May 7, you know, it will not work, okay? So yeah. So anyway, so we will not do it. And therefore, I'm going to rerun the scanner looking for bottom levels of premium. So as we are done, we are rescanning this with bottom. So what we'll do is that we'll be planning using the list. Okay, we'll be planning on either horizontals or I could also call them calendars or double calendars, and you know, assess if those trades are valid or not. In the meantime, while this is loading, I'd like to go back to revisit my directional list. Okay, why? Well, because again, we talked about the S&P earlier. We said that, you know, there may be a possibility for the climate to keep dropping for 1 or 2 more days and then turn and start going up and begin making all-time high. So if that's the case, we want to be there. Yeah. Got you. Yeah, Thinkorswim. Well, I haven't seen too much inaccuracy, okay, but to be honest, my analysis is done more with other platforms as well. TOS for execution, you know, I like it very much, but for the analysis itself, it's definitely not my favorite. So, you know, I look at other sources, as you can see in the sessions. TradeStation is my bread and butter and very easy to check, and it's accurate, even though we got plenty of the no data available today, which is not right. So there is an issue there. But my second source, which has proven to be quite accurate, is TradingView. So even if you don't use TradingView for other things, I mean, you could have the UFOs and TradingView and everything, but even if you don't use it, just get yourself a basic account, which is free, and that way you can just input the stock symbol and get data for earnings, dividends, and things like that, which is very neat on TradingView. So that could be a good kind of like workaround, okay? Anyway, so let's begin with Dow and see if that particular stock will provide an opportunity or not. 5-6 earnings BUD in TS. Yeah, it gave you that data. Out of curiosity, I'm just gonna input BUD to see BUD. So if I type BUD, okay, it's taking a long time. Come on. It is giving me no data available, but it's giving you data, okay? So then, thanks for that, Christian, because it means that I'm the one who has an issue, okay? So after the session is over, I'll be deleting the cache folder and doing some cleaning because obviously there is an issue there on my end. Thanks for that. Thanks, that's the beauty of teaming up, and, you guys are listening to the sessions actively instead of just watching it like, in the sofa. You are sitting in front of your computer and kind of replicating what I'm doing. This is the way to do it, my friends, okay? So I appreciate the teamwork there. Anyway, so Dow, what do we have with Dow? Okay, so let me do a little bit of cleaning here. We have plenty of stuff from prior sessions related to that stock. So first of all, we got 51% probability, as you can see in blue. So 51% probability means that, we have green light to go ahead and plan on a trade. The climate is blue, confirm, 2 out of 5. So we have green light to plan trades to the long side. And then when looking at our entry prices, our reference price for today is 64.74, which is more or less here. So let's take a look at this. So here is the beginning point of this UFO, which is 64.57. The current value for the stock is 68, basically. So for us to get an entry, we will need to see that stock to fall, and come to here. And then we would expect it to go higher. So that's the trade we are planning. So now, the reference point is 64.74. Our entry point will be 64.57. So is this okay for us to accept or not? And the answer is yes, we will accept it. Why? Because a moving average, as the M suggests, is moving, meaning that if that stock drops from 68 lower, the moving average, which is currently pointing at 0.74, will start pointing lower at 0.70, 0.60, and again, we should come close enough to that green UFO for the trade to be accepted, especially with stocks. Remember, there is not, there is no point to try to be that millimetric and precise with stocks, because stocks are fragile by nature. They depend on the S&P, they depend on the sectors, they depend on other stocks, and the idea is to enter, more or less in the region of price where we are being smart, okay, and then use options to manage and limit the risk. And it's okay to leave a little bit of lack of precision with the entry. So, by the way, dropping from 68 to 64.5, odds are, I would say that the EMA is going to be within the UFO, to be honest. But again, it's difficult to predict. So again, just by having this rough view, it's good enough for us to know that's the UFO for us to lean against. So now, what else? If I look at pre and post market, what probability do I get? We get 38%. So that's to be ignored. And therefore, what I was doing looking at regular session, it's what needs to be used. I'm liking the fact that earnings were reported earlier in April. And that means that even though I don't have the date, the next earning will take place somewhere like 3 months later or 2 months and a half later. Now, I do need the date. Okay, I do need the date because, I may relate to this date later to pick the expiration date of the options. And you can see here, it's going to be 22nd of July. Is going to be the next time this company reports earnings. If that's okay, guys, I'm just going to have a sip of water and we're going to continue. Thank you very much. So anyway, so we are now back in the chart and ready to begin planning the trade. So I'm going to load Dow. And click on Dow. So again, the issue that I have here where I need to click manually maybe is related to the same issue I have with the dates. Okay, so again, I need to do some cleaning on the computer. Okay, so here's the option chain. Again, back to the chart. Before we get back to the option chain, I also need to find the target. Okay, so what is that stock doing? So if I look at the monthly time frame, that stock is making all-time high. Okay, it is making already all-time high. So this is a case, we discussed this case multiple times, and last year we had so much fun with this type of cases in it. This is a case where we cannot set a target. I mean, you could, based on whatever preference, but you cannot set a target based on UFOs because there is no trace of sell until dollar is above price, because price has never been above price. Therefore, one technique that we use, okay, which is powerful, is just to get into the trade and just follow price, see how far it goes. And then something that we will add that we didn't do last year, for example, is additional option strategies to be added afterwards as a trade management technique to embellish the trade, to lock in some profits and still allow yourself to profit more if the stock was to keep rallying. And if it goes against, at least you got some profits that are locked in and you cannot lose. You actually lock in profits. So we will talk about that, similar to trading a stop, but the beauty with options, especially with positive gamma, is that it's dynamic. So when the stock moves against you, you could make some money on that. When the stock moves more in your favor, you can also make some money on that. So it's kind of a dynamic way to lock in profits. It's not a static way to lock in profits. Okay, we'll talk about that, when we get into a trade and that happens. So the plan for the trade then is going to be crazy simple. We're just going to go ahead and buy a call. That's it. Why? Because we don't want to cap the profits in this initial phase of the trade. Different story will be what to do if the trade goes against us, what to do if the trade starts moving in our favor. We'll talk about that at another time. But at the moment, the entry into this opportunity is buy a call. Now, which one, right? Which expiration date? I mean, if we had a target, and let's say the target was located $5 higher, so you could go ahead and say, well, based on implied volatility, that option has 68% probability to hit, $5 higher, which is the 1 standard deviation based on implied volatility. So you would say, okay, 23 days is what I need. Great, but we don't have a target. So how do you pick the date? Well, we're just going to align ourselves with earnings. Okay, that's what we're going to do. Earnings, we said, are July 22nd. The nearest date to that date is July 16. So that's the date we're going to use. That's it. Why? Because, well, you buy a call, you're going to suffer plenty of theta. You're going to lose money on time decay. If it takes time for that stock to move in your favor, it's not going to be fun. Okay? But what's the beauty of using that expiration date? Well, after a while, and as earnings begin approaching, that expiration date will start gaining additional value in the form of implied volatility as an expectation for price movement because of earnings are going to be reported. And therefore, that increase in extrinsic value of the option will offset and replenish plenty of the theta you lost in the initial 1.5 months or even maybe up to 2 months of being in the trade and the stock did nothing. So again, I'm not saying that, magic, you're going to go back to break even just because that's it. No, that's not what I'm saying, but definitely it's a little bit of a help to offset the theta problem. Okay. In the meantime, we will have other techniques during the life of the trade to help even more, both when the trade moves in our favor as well as if it moves against us. But we need to lock in the entry with a smart expiration date, and this is the smartest based on what I just said. So with all of this understood, I will just right click to analyze and buy a single call. I need to do some cleaning from prior options that we input here. Here we go. So I have here now in this setup buy one of the calls that expire in July 16. Okay, now the question is, which strike should I use? Well, to decide which strike should I use, that's when I need to go back to my chart. That's when I need to draw a dotted line that aligns with the top of this UFO, which is our selected UFO 6457. So 64.57. Okay. Today is here. So this is the time where we are planning the trade. Okay. So if any time after this vertical line price come and hits 64.57, so you could be in a trade. As you know from prior cases that we had, you need to review this on a daily basis. With such a parabolic move to the upside, with such a push starting making all-time high, this EMA is gonna rally very quick into tomorrow. So if we don't get filled into tomorrow, probably tomorrow you'll be using the UFOs above to get into the trade, and they are way nearer to price. So you actually have I would say a pretty decent chance of being filled into tomorrow, where today it's probably the chance is not that great to being filled today. But you know, again, it's not a big deal. It's okay. It's all good. I'll show you the process, and if we don't get filled today, you can repeat the process tomorrow yourself, or guess what? We're gonna be together again tomorrow, so we can do it one more time, just a bit quicker because it will be the same stock. So with that number in mind, 64.57. Okay, so 64.57. So with that number in mind, okay, the question is how much delta I get. Well, if I buy the 70 call, I get 25 delta, which is just a bit too little. Okay, it's just a bit too little. We like to get above. We like to get about 30 delta. How are you, Joanne? It's very good to see you. You take care. Bye bye. So now, how do I do it to get more delta? Well, I need to buy an option which is, you know, closer to in the money, or you know, closer to at the money, I should say. Now, problem: we only have $2.5 strike price increments. So when I look at the price of the stock, as you can see above, being 68.06, and you see the next strike to be 67.5, which is, you know, at the money, it's actually slightly in the money. So you know that the current delta will be over 50. But we are not looking at what the current delta will be. We are looking at the delta at the entry price, which is below 67.5. So maybe that strike will do and will provide me with 30 something delta or so, and it's giving me 37. So it's just a bit too much, right? Because we like to be closer to 30, right? And if we had, you know, $1 strike price increments or something like that, we'd be able to get very close to 30. It would be very nice. But in this case, we don't. So in other words, you have to pick, you know, use 67.5 or use 70, right? Well, I'm gonna go for 67.5. It's gonna make the trade just a bit pricier, okay? But at the same time, being just slightly, slightly closer to price, meaning that the moment the stock moves, that option now quickly becomes at the money or in the money. This is gonna give us advantages when it comes to taking other steps during the life of the trade, as you will see. So therefore, if I have to choose, again, I'd love to be closer to 30, but then 37 is going to be my choice. So we're going to go with the 37, with the 67.5 call that expires in July 16, which provides 37 delta. So I'm going to place an order here. So I'm just going to go for Dow. Okay, so here's Dow. Using July, we're gonna use 67.5 call, and we are buying single call. Okay, and we're gonna do that with a triggering condition based on the price of Dow to be equal or less than 64.57. Okay, I'll make this a market order. And we'll keep it as the order. Okay, we will keep it as a the order because again, this is to be reviewed tomorrow, because tomorrow the EMA would move. Okay, we've discussed that concept numerous times in the sessions, so I believe this should be clear. So I'm just gonna click save, confirm and send, and then the order is now in the system, waiting to get filled here with Dow with an order here. To buy, okay, to buy this call. Out of curiosity, what's the price for the call? Yeah, 34. So yeah, so it's about the same. Yeah, so not much difference there with the COP. I was just curious to see what was happening to the stock. So anyway, so we have the trade. So I'm gonna add DAO here to the list, and with that said, we're gonna disconnect from the public streams, and we're now gonna get into back to non-directional, and we're gonna start building a double diagonal. So for the ones of you who join us today in the public streams, thank you very much for joining me, my friends. I will see you tomorrow, actually. So it's around the corner. So more tomorrow as we see each other. You know, if you guys are able to join me, it'd be lovely to see you again. You guys take care. Talk to you soon. Okay. For the ones of you in our private room in tradewithufos.com/live, remember, you don't need to do anything. Nothing changes. We just continue as normal.